The aftershocks from the unrest in Libya are also being felt across global financial markets. Libya is the world's 12th largest exporter of crude, and the price per barrel has shot to a 2.5-year high, amid investor fear that production could be disrupted. It follows this address from Colonel Gaddafi's son, Saif, who warned that all foreign oil companies could be made to leave. Rising oil prices can accelerate inflation and eat into companies' profits, further unsettling an already rocky global economy. The US lifted sanctions on the Gaddafi regime when it compensated the victims of the Lockerbie bombing. With free trade now a possibility, foreign energy companies lined up to do business with a man once considered a pariah on the international stage. The OPEC member is Africa's 4th largest oil producer, after Nigeria, Algeria and Angola. It produces 1.8 million barrels per day. 80% of its crude exports are sold to European countries such as France, Germany and Italy. Libya has deep economic ties with its former colonial master. The two nations signed a friendship treaty in 2008, and Italy is now the biggest foreign investor in the North African country. Libyan investors have used oil wealth to amass stakes in a number of Italian companies, including oil giant Eni, bank Unicredit, and car maker Fiat. They even hold a 7.5% share in Juventus Football Club. While Libya has some of the highest living standards in Africa, some estimates indicate 1/3 of its people live below the poverty line. Some say the wealth is not trickling down to the man in the street.
There was plenty of oil money to spread around, and that he could start making people wealthier than they are at the moment. I mean, what's extraordinary is here's somebody who's been in power for over 40 years who hasn't done that.
If the violence escalates, oil prices would be driven up further. That would come just as many Western economies are emerging from the global economic downturn.